from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Nvidia beats revenue for chips in data centers, gaming, cars coming in strong. But will CEO Jensen Huang's bid to buy mobile chipmaker ARM go through? That's the question. Plus, Robinhood made more on crypto trading than on stocks and options combined. The company warns lower trading activity could be ahead. We're going to dig into the app's first earnings report as a public company. And the engineer, widely recognized as the inventor of Ethereum, joins us for an extended interview about the future of Ethereum versus Bitcoin, why he's skeptical of Jack Dorsey's DeFi plans and Mark Zuckerberg's metaverse, and so much more. Vitalik Buterin is my guest on the upcoming Bloomberg Studio 1.0. We'll get to all of that in a moment, but first let's get a look at the markets with Bloomberg's Kriti Gupta. Kriti, take it away.
Well, Emily, it was a risk-off session in the markets, and all had to do with the Fed starting to signal that taper kind of tantrum, or the tapering that they were expecting to happen, could come as soon as December. Of course, that being a risk-off tone for markets. You can really see it behind me. The money didn't even go into big tech, which kind of serves as that haven. It was a complete risk-off day for stocks. A lot of flows going right into treasuries. I want to show you what that means for Chinese stocks, though, because when you start to talk about tech, U.S. tech, Chinese tech, a lot of the sentiment here is that people buy the dip. So if you hop into my terminal, I want to show you that those fund flows, you can really see on the right side of the screen, you did actually see some buying the dip, some money going into China, even as you started to see that regulatory scrutiny weigh on that sector. And yet, that is starting to dry up too. Those funds just not going there. Looks like they've lost some of those buy the dip bidders. And when I talk about a risk off day, there was one sector that was doing fairly well in trading. You did have the Drive ETF, essentially the electric vehicle ETF, actually green for most of the session, in stark contrast to the rest of the tech trade, which, as you can see behind me, didn't end up so well either. NASDAQ Biotech Index, the semiconductors, and ultimately those electric vehicles all ending in the red. Really that Fed tapering, spooking all investors. So that's the macro picture. Let's get to Ed with the micro.
Yeah, Robinhood debut earnings, and I think we'll agree, right, the main takeaway is that crypto trading surged to account for more revenue than equities and options trading combined. But the stock down 5.6% in after hours. It dropped as much as 8%. And really what the market is looking at here is the guidance for the third quarter, the coming quarter. The company says that seasonal headwinds will result in materially lower revenue for that third quarter, something they say is industry-wide. But I want to focus on Nvidia as well, the world's 12th largest company, biggest US chip maker, up now in after hours. It fell initially. Look at this growth in revenue. Top line growth of 68%. You can see there on the right-hand side of your screen. Not as good as the prior quarter, 84%. We know Nvidia said it was constrained by the global supply shortage in semiconductors. We also got commentary around that ARM deal, Emily, them saying that, yes, it's proved more problematic than they thought with global regulators to get the deal across the line, but they're still confident that it will get done. Other than that, tick the box items, strength in data centers, strength in gaming. That's what's caused this big orange line to outperform the S&P 500 and the Philadelphia Semiconductor Index year to date. Real outperformance in Nvidia, and a lot of that is convincing the market that its graphics chips for AI-based compute, data center gaming is the way to go. Emily.
All right, Ed, thanks so much. We're going to dig further into those Nvidia results. Again, strong numbers, as Ed said, data centers, gaming, automotive, but looming over the results, the question of whether CEO Jensen Huang's bid to buy the mobile chip maker ARM will go through. Lots to discuss. I want to bring in Joanne Feeney, partner at Advisors Capital Management. Joanne, let's start with the top line. Strong numbers, strong forecast. What are your headline takeaways?
Yeah, Emily, great to be with you. You know, NVIDIA clearly is playing a really important role in cloud computing and AI gaming, and all those things you just listed. I think the challenge for investors at this point is that the multiple is still pretty high. It's trading at 48 times next year's earnings, and the expected earnings growth for the next 3 years is only around 23, 25%. So it's looking a little expensive just as a stock at this point. They also do face some headwinds. I think investors are really counting on the ARM deal going through, and there's a lot of reasons to question the likelihood of that, starting with the fact that ARM provides the blueprints for so many chips around the economy, around the world, particularly, though, chips, blueprints that are being used by a lot of a lot of NVIDIA customers like Google, like Microsoft, like Facebook, and Apple. And so if NVIDIA gets control of ARM, a lot of those companies are going to start to worry that they may not get those blueprints in a timely fashion and really could curtail competition, particularly in those high-end chips where some of their customers are developing and have developed competing chips for the space in AI and other advanced applications. So I think there's a lot of expectations built into NVIDIA right now that should make investors pretty cautious. Plus, you also have the cryptocurrency mining, where there's been a big change in the technology in Ethereum validation that takes away a lot of the demand for the mining activity that has sustained some of the demand for those NVIDIA gaming chips.
That's actually part of what we discussed with the inventor of Ethereum, Vitalik Buterin, on Studio 1.0, which is airing tonight. Joanne, we're going to get a preview of that later this hour. But what should or could we expect NVIDIA's role in crypto mining or the lack thereof to be?
Yeah, so the challenge right in crypto mining is that it's been to date very, very expensive, as everyone has heard. You know, the energy requirements of small countries. And that has to change in order for crypto to continue to be used and to be used more often for more frequent, more rapid transactions. So we know the technology has to improve, and Ethereum has made those changes. It's now about to be implemented, and that really is going to reduce the demand for those miners and therefore for those graphics chips. It's not going to be so computationally intensive to do the validation, and so that that is something that, and I think that's why NVIDIA has been really de-emphasizing. Right, and trying to make its chips less appealing for mining so it comes out of people's expectations. And that could be one reason why the expected growth in earnings is moving downwards from what they just recently experienced to the 23-25% range. And again, when you look at the multiple on the stock, that just should give investors pause about continuing to own it.
All right, well, we got to talk about ARM. It has taken a long time from the outside, and then we heard it from Jensen Huang today. He still expects the deal to go through, but it's taking longer than they expected. We know not everyone else in the industry is on board with this. Do you think that's problematic?
I really do. I think the Googles, Microsofts, Facebooks of the world have to be putting up a big fight against this, putting forward very strong arguments that you don't want one company, one producer of chips to control the development of blueprints that so many other companies use to develop their own chips. It's really, I think, very anti-competitive if a company like NVIDIA were to gain control of that. Obviously, you can never tell how these evaluations will go, but when you have so many countries that need to get on board, it just seems like it's going to be pretty challenging for this deal to get through.
So if it doesn't happen, how bad is that for NVIDIA?
Yeah, hard to tell how much of that is in the current stock price. Obviously, the price has come up a lot, since that deal proposal was announced. I'm not going to try to make a guess on how much downside there is in NVIDIA from here, but I think it would take the shares down.
Okay, so what are your biggest concerns for the current quarter? Obviously, we're still talking about the chip shortage. Could be to the end of the year for some kinds of chips, to the end of next year for other kinds of chips. That's what I'm hearing.
Oh, yeah. No, I think the chip shortage is going to run well into 2022, and that's going to affect the entire industry. So on the one hand, that does constrain how much they can grow and how much they can sell, right, depending on capacity. On the other hand, it does stretch out this period of time when chip growth and profit growth will run ahead of normal. And so I know that, the semis have really flattened out over the last few months, but I think this creates some really good opportunities. We like Qualcomm here, we like Qorvo, we like Broadcom. There are a lot of places where investors can see that there's some very attractive valuations, and that shortage I do think is going to stretch to the end of 2022 at least, and that creates just a longer runway for earnings growth to be running ahead of normal. So I think the cycle is just going to elongate because of the shortages.
All right, Joanne Feeney, always good to have you here, partner and portfolio manager at Advisors Capital Management. Thanks so much for your insights there. Okay. Coming up, we're going to stick with earnings and take a look at Robinhood's first quarterly report since going public. Crypto trading revenue soaring over 4,000% in the period. We will break down the numbers next. And later, we're going to hear from my fascinating interview with the Ethereum creator, Vitalik Buterin, our special guest on the latest edition of Bloomberg Studio 1.0. His thoughts on the future of decentralized finance, the threat to legacy companies like Facebook and Twitter, And could we soon see the end of Ethereum mining? This is Bloomberg.
There will not be any more mining. Ethereum's energy consumption will go down by like a factor of more than 1,000. So it'll go from being a big problem to basically not a problem at all.
PayPal will stop charging late fees on its buy now, pay later option, the plan allowing customers to split purchases into small payments. It has exploded in popularity in the United States, especially among younger shoppers. Since PayPal began offering it last year, customers have used the service to make $3.5 billion in purchases. Well, Robinhood reported its first earnings since hitting the public markets, and get this, the company made more money from crypto trading in the second quarter than it did from options and equities trading combined, the brokerage, bringing in $233 million in crypto trading revenue in the period, up 4,560% from the $5 million it generated a year earlier. Let's bring in Bloomberg's Sonali Basak to discuss. I feel like we have to start on these crypto numbers. Sonali, Vlad Tenev, the CEO, told us that crypto was going to become a bigger and bigger part of the business, but this big?
Yeah, it certainly happened very quickly, and for it to surpass equities in this fashion so quickly, it was really eye-popping numbers, certainly for the company in a single quarter. But on the flip side, that decline in the money they were making from equities, particularly in what they call transaction-based revenue, otherwise known as the money they make from payment for order flow, is another concerning part of that equation, Emily. So as they shift more towards crypto, what happens to their user base? How many first-time users become regular day trading stock traders versus members of the crypto community that are demanding more crypto products like wallets?
Meantime, they also warned about lower trading activity in the current quarter. Is this alarming? Is this seasonal, to be expected?
So they say it's seasonal, but that still is concerning to investors, of course. How much lower does it go? What do they mean by seasonality? Do they mean just from lower volumes? Are they worried about other market activity? There's a lot of people in the market that are warning of some sort of drawdown, 10, 15, as much as 20% in some cases. These warnings come from all over the place. And does it mean that they can rebound as strongly coming after it? These are all unanswered questions for Robinhood. And is this a longer shift towards their other products, options and crypto? These, again, unanswered questions and still concerning to see that drop off.
So let's dig into payment for order flow in particular, which as of now, that's how they make the majority of their money. What are we seeing there?
Yeah, so they typically make about 80%. When I did the calculations, it's a little bit under that, but pretty much matching that. So it's still a big part of their revenue, as excited as most people are about that crypto trading. Right now, there's not a true update on how that might change. During the roadshow, we know that Robinhood had said that they would consider other options if there was a real regulatory threat to that business, but there has not been real movement on that front. So until there's more certainty, that could be a headwind for them and a pressure to diversify away from them. Again, they did see a jump when it came to transaction-based revenues for options, but that decline in equities trading is a big question mark. Options tend to be more profitable when it comes to payment for order flow. We have known that those numbers would be lower, but does that stay much lower? And given that it's 80% of their revenue, do they have a plan to diversify meaningfully beyond that?
Right. All right. Well, we're going to continue to follow all the headlines as they roll out of the call. Sonali Basak there, thanks so much for that update. Meantime, Chinese tech giant Tencent has warned investors of more curbs on the country's tech sector. This is the company reported its slowest pace of quarterly revenue growth since early 2019. The deceleration underscores the impact of Beijing's crackdown, especially on the ed tech industry, which has been a major source of ad revenue for the company. Another area that's cooled, Tencent's mobile gaming business. Playing time has decreased with Xi Jinping's campaign to address certain social issues and redistribute wealth. Arete Research Managing Director Richard Kramer spoke to us earlier to talk about his outlook for Tencent.
Tencent's $223 billion of listed investments is about half in China Internet, and that's fallen by about 10% since the end of the quarter that they just reported. Now, alongside that, they have about 1,000 VC investments, many of which are slated or expected to be monetized by taking them public on exchanges such as in the US. And clearly that route to monetization of all those assets that Tencent has built up is going to be very difficult, if not completely blocked in the near term. So monetizing those extra assets, we put a very large conglomerate discount on them, partly because if you went to sell these large stakes in companies like JD or Meituan or others or Didi, the stock prices would crash, and partly because the ability to directly monetize these stakes is very difficult. What you're putting up there in terms of the chart shows you that the business is basically split between gaming, fintech and cloud services, and advertising. And the one area which was especially disappointing were the social network services, which are all the content services that Tencent hosts in video and music and literature and so forth.
Yeah.
And again, those had very tough comps. And there are going to be increasing regulations on the types of content that Chinese companies are able to provide to Chinese consumers.
So, Richard, quickly here, is there a good way in your world for someone to invest in China at this point?
Right now, as far as we can see, there is just too much overall uncertainty across the entire sector to confidently say we can bottom fish these stocks. We have seen multiple attempts at people trying to make that call, again, oftentimes because they're somewhat self-interested. But the reality is that we are still seeing these regulations unfold. And unlike regulation in the West, where there will be long legal battles and rights of appeal, in China, these regulations are likely to be enforced very swiftly and very harshly, as you can see with the penalties imposed on Alibaba and Meituan to date.
Are you saying that China or Chinese tech stocks are uninvestable until we get more clarity?
I'm saying for many of the Chinese tech stocks, and you could probably put names like JD.com to one side because it's a pretty traditional online retailer, but for many of the Chinese tech stocks, they simply don't know the rules of the road that they're going to have to follow to give investors the certainty to understand that they can, that what the impact on their business will be. And we also don't know the wider environment that these companies will be operating in. Will they be able to provide, will they get approvals in the case of a Tencent for games that they want to launch in the market? This was something that if you go back to the chart from 2018 on Tencent, the stock drifted sideways for a year because they simply were unable to get approvals for new games.
That was Richard Kramer, Arete Research Managing Director. Coming up, swirling with anticipation, we're going to get insight into what Apple plans to release this fall with our very own Mark Gurman. Power On is next. And gains for Salesforce. The enterprise software company's become so popular among hedge funds that 14 of them have more than 5% of their disclosed equity investments in the stock. Compare that to Salesforce's peers that have an average of only 3%. 3 hedge funds owning 5%. Take a closer look at that. This is Bloomberg.
I'm Mark Gurman with Bloomberg Technology, and on this week's episode of Power On, I'll be taking a look at what you should expect from Apple's next iPhones and its other device launches happening later this year. Apple's planning 4 new iPhones, upgrading the existing 5.4-inch and 6.1-inch screen sizes on the regular phones, and the existing 6.1-inch and 6.7-inch screen sizes on the Pro phones. The updates this year will be more on the modest side after major changes were launched last year as part of the iPhone 12 with 5G. This year, the biggest change will be to the notch. That's the area at the top of the display. For the first time, Apple will be shrinking that. Otherwise, the new iPhones will focus on a faster A15 processor, a speedier and higher frame rate display called ProMotion on the new Pro phones, as well as new camera features for both the basic models and the Pro models. For the Pro phones, Apple's planning a new higher quality video format called ProRes. That will make it much easier for video editors to really get the most out of their footage recorded on an iPhone. For consumers, Apple's planning two major new features. One is called cinematic video. That's basically portrait mode, but for video instead of photos. That means when you take a video of an object, it will appear sharp at the forefront and blurry in the background. That makes a really cool effect for most people, and now this is going to translate over to video. The other new feature is called photographic styles. That will use AI to improve the colors, highlights, shadows, and other elements in your photos using artificial intelligence, like a souped-up filter system. Whether these are called the iPhone 12s or the iPhone 13, Apple's expecting another blockbuster sales period. The company has asked suppliers to build over 90 million units of the new devices. That means it's really expecting great feedback and strong sales of the new devices. Apple typically announces its new models in September, and you can expect multiple launches from Apple over the balance of 2021. So what about those other device launches? Well, you should expect the first revamp to the entry-level AirPods since the first models were released at the end of 2016. You should expect a new design and a new case that makes the new entry-level AirPods similar to the AirPods Pro. That will include improved audio technology and shorter stems, so the AirPods look smaller when sticking out of your ear. You can also expect a revamped iPad mini with a larger display and slimmer bezels, as well as a new 9th generation iPad geared towards students with a thinner form factor and a faster processor. There's also going to be new Apple Watches. These will be redesigned watches with flatter displays and faster processors. And lastly, what I think a lot of people, including myself, are very much looking forward to are the first high-end MacBook Pro updates in several years, including new M1X processors, a revamped design, as well as a MagSafe charger system. I'm Mark Gurman. This is Power On.
Our very own Mark Gurman there. Sign up for his weekly Power On newsletter at Bloomberg.com. Meantime, T-Mobile US says over 40 million customer records were impacted in a cyber attack. About 7.8 million current customers had information stolen. The other information came from past or prospective customers who had applied for credit. T-Mobile is offering those affected by the attack 2 years of identity protection services. Coming up, Planet CEO Will Marshall joins us to talk about the growing space economy and the company's renewed partnership with Google. We'll have that conversation about the great beyond next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to tech earnings. Ed Ludlow has been listening in on the Nvidia call where CEO Jensen Huang has been speaking. Ed, of course, the big discussion is around the ARM Nvidia deal, whether that's going to happen. What has he said about that?
Yeah, so they've acknowledged that it's just taking longer to work with regulators than they otherwise expected, but they're still confident the deal will go ahead. As you know, Emily, a number of ARM's licensees, Qualcomm, Intel, are Nvidia's competitors. They've registered complaints. But look at the share price in after hours. Everything is rosy, Emily, up 1.8%. It initially fell when the numbers first hit, but they're talking about broad-based demand in cloud, broad-based demand from enterprise spending, gaming. What was interesting, crypto chips, they don't expect that to be meaningfully contribution going forward. But let's focus on the ARM deal. This is astonishing because the shares have done so well over the last 12 months. When the deal was first on the table, for Nvidia to buy ARM from SoftBank, it was a stock and cash deal worth $40 billion. But because the stock has gone up so much year to date, we're now at a more than $50 billion deal. And you have some on Wall Street saying, well, why spend that money for just a little bit of incremental revenue? Why don't you guys just become a licensee of ARM like everyone else, like Qualcomm, like Intel? It's certainly something we've got to ask these guys going forward when we have those CEOs on the show. But bring up the share price year to date, because at the end of the day, investors have been pouring money into this stock. The orange line is Nvidia, the blue and white lines, the S&P 500 and the Philadelphia Semiconductor Index. It's just massive outperformance. They've done really well, Nvidia, to basically sell the virtues of their graphics chips, which basically power AI-based computing for use in data centers, for use in gaming, and they're really winning those battles, taking market share from others like Intel. Really going to be a stock to watch going forward, regardless of whether the ARM deal goes through or not.
Absolutely. All right, Ed, thanks so much. Meantime, this year has marked a turning point in the race to space. Not only have we seen billionaire compete against billionaire to be the first or the furthest to propel what could become paid passengers into space, but we've also seen growing demand for satellite data in the burgeoning space economy. San Francisco-based Planet operates the world's largest fleet of Earth observation satellites, using SpaceX as its go-to launch provider. The company has announced it's renewed its partnership with Google, shifting attention to the search engine's cloud. Joining us now to discuss, Planet CEO Will Marshall, to talk about the announcement and more. So let's talk about this Google partnership. What exactly does it mean? Obviously, we know Google uses satellite data for so many things, from maps to Street View and beyond. How's Planet involved?
Well, historically, we've been powering their maps, and that's how your maps stay up to date. But this is a completely new partnership to enable our data and Google Cloud for our data, for our customers to easily process our huge amounts of data at scale, and basically get the benefits of our data and Google's cloud compute in one simple, easy location. It's a win-win-win, as I call it, because they get to sell their compute with our data, we get to sell our data with their compute, and our clients all get more value.
Now, there's so much competition in the satellite industry right now. What makes Planet stand out?
Well, there's a big renaissance in space, but I think it's largely misunderstood. So let me just say a couple of things. Firstly, the rockets are getting cheaper. Everyone knows about that piece of it. And they've brought down the cost by about 3 or 4x. The second thing is the satellites have changed in capability per kilogram a tremendous amount. I mean, about 1,000x. That's the biggest shift that's underpinning this. The miniaturization of electronics has enabled us to put more sensors up in space, producing more data sets, much more cost effectively. But then what that really brings it to is actually it's nothing to do with the rockets or the satellites. It's actually to do with data. It's about the transport and creation of new data sets that enable our economy to be smarter, more efficient, to be more sustainable, and so on. And also, it's not so much about Moon and Mars, even though that captures the attention and the billionaires going to space. It's actually about the Earth. These are about these data sets have huge value. The transportation of data enables things like teleeducation, telemedicine. The creation of new data sets like our own at Planet is the enablement of things like efficient and sustainable agriculture practices, efficient monitoring of overfishing, stopping of illegal deforestation, the enabling of smarter decisions for finance companies and insurance companies and civil government and so on and so forth. So it's actually tightly connected with the Earth. But people think about the space piece. Actually, it's very connected with the Earth's economy, and it's booming the Earth's economy. It's helping the Earth's economy to undergo digital transformation and sustainability transformation.
Now, you've just signed a multi-year launch agreement with SpaceX. Know you've been a partner of theirs. What is the timeline? What is the arc of how this will play out?
Well, look, we launched with many launch providers, but we have been delighted to be partnering with SpaceX for many years now, have launched on 7 of their rockets, 80-something satellites. And this is a partnership that extends for the next 5 years, enabling really low-cost, frequent access to space for our satellites. We actually enabled launches, 4 launches a year on average for the last 5 years. So every 3 months or so, we're putting up the next generation of satellites. Again, what this then enables is us to produce better and better data sets. Just last year, we increased the amount of data being produced by our satellite about 5x over the previous year. I mean, so we're seeing for roughly the same cost, by the way. So the increase in data per dollar is going up really, really fast, and it is already on the back of 1,000-fold increase in data rates. So Planet now images the whole planet of the Earth every day, or the landmass of the Earth. That's 100 times the nearest competitor, and over 10 times everyone else combined. So we're producing vast data sets that have just never been possible prior to this because of these cost efficiencies.
Now, when I look at the night sky with my children, I'm often seeing satellites before I see stars, a very different experience than I had as a child. Do you have any concerns about the space around our planet getting too crowded?
I do. I actually think this is a serious concern we should be caring about the night sky. It is an incredibly human thing to look up and see the stars, and to have that interfered all the time with satellites is a big deal. Our satellites are very small, so you can't actually see them with a naked eye, so we're going to contribute to that. The bigger satellites do. They're very reflective. There are things that can be done. For example, a lot of the satellites recently are the SpaceX ones, the Starlink satellites, and they are trying to do some things that darken the size of the satellites so that they're less reflective, so that they're less onerous in the night sky. And certainly the astronomers are quite upset, because every time they're trying to take a long exposure with their telescopes, they're having a streak across their satellite, from a satellite across their field of view, which is really upsetting them right now. But also, as you say, for children who grow up now, we want them to be able to see a dark night sky. Of course, satellites you'll only be able to see just after dusk and before dawn, for an hour or two. So another way to have a really dark sky is wait to the middle of the night. But I think we as satellite operators should be trying to ensure that kids all around the world can have a clean a night sky without too many satellites.
Meantime, Planet partners with governments, with institutions, with news agencies. You have a relationship also with the government of Afghanistan, providing data for climate and peace negotiations. Will that continue under the Taliban?
We provide our data to a lot of different players around the world. Well, of course, the Taliban is a restricted entity under US law. We cannot provide data to the Taliban. We have been working with the government of Afghanistan on detecting floods, and we've saved a lot of people's lives over the last year in Afghanistan. Unfortunately, this transition will not allow that particular effort to continue, but we will and are providing our data to a number of agencies like the UN, like NGOs, like news media, to shed light on what's going on, to assist in relief operations, to assist in the transportation of people out of the country right now, and so on, and the medicine and relief to any refugees. We have long-standing relationships with human rights organizations that will then subsequently be helping with those refugees. So we help governments with a wide variety of things. We help the Afghanistan government with that. We won't be working with the Taliban, no. But we will be continuing to work with the NGOs that are in and on the ground there to help with relief efforts.
Okay. Now, you're planning to go public this year via SPAC, $2.8 billion deal, potentially. How is this going to accelerate Planet's mission?
Well, look, we are really excited, firstly, to be going public. Planet is ready to go public. We're a scaled business, over 100 million in revenue last year. We have a scaled satellite fleet, over 200 satellites operating, as you mentioned at the beginning, the largest Earth imaging fleet in human history. But yes, we were also this mature business, and we felt it was the right time to go public. We evaluated the different options. We decided that the SPAC process was a good one, and we are, yes, indeed announcing that we're going public just a few weeks ago. And we're really excited about it, not just because we're ready, but also because the world is ready for Planet. I have to say there's been quite an acceleration of interest in our data, and that's because as the world exit out of COVID-induced recession, everyone's trying to boot into a sustainable economy, and our data systematically enables a sustainable economy. Because what do you do if you want to measure your environmental or ESG goals as a company? Well, you have to measure things like your supply chains, and that's actually this Google partnership. One of the focus areas is in sustainable supply chain management, and helping companies to measure and ensure that they're a sustainable source. What do you do as a country if you're trying to do sustainability? Well, you have to measure your emissions, where we recently launched Carbon Mapper, a series of satellites that will be able to measure point methane and CO2 emissions all around the world on a regular basis. And so we hope to help this sustainability transition.
Will Marshall, CEO of Planet, great to have you here. Thanks for giving us the big picture, very big picture. Coming up, more businesses beginning to require proof of vaccination, but how exactly is it working? I'm going to speak with Commons Project CEO Paul Meyer about a digital vaccine card next. This is Bloomberg. Here in the U.S., the Biden administration will start offering booster shots on September 20th to all vaccinated adults. This is a big expansion to a program previously limited to those with weakened immune systems. White House COVID-19 response coordinator Jeff Zients says he expects the U.S. to administer about 100 million vaccine boosters in coming months.
To end this pandemic, we have to protect the American people, and we have to continue to do more and more to vaccinate the world. Both are critical, and we're already proving that we can protect our own people here at home as we help others.
Getting vaccinated people is one issue, but being able to prove it may be another. In New York and San Francisco, it is as businesses are requiring indoor customers to show proof of the COVID-19 vaccine. Sounds tedious, and the question is how places will swiftly verify that status. Commons Project is working on developing a smart health card, a digital COVID vaccine card, and joining us more to talk about how it all works, Commons Project CEO Paul Meyer for our City Lab segment. So, Paul, I want to talk about what Commons is doing, but first of all, the Biden administration, multiple states dismissed this idea of a vaccine passport. At this point, was that the wrong call?
Well, look, I think what people started getting were paper CDC cards as people have gotten vaccinated. I think what we're realizing is limitations of paper, which are easily forgeable and not verifiable. So I think now what's exciting, there's been a huge groundswell of momentum behind the smart health card standard that we co-developed. States started with Louisiana, then California adopted the standard to make these digital smart health cards available to Californians. New York just embrace smart health cards, our standard for their Excelsior Pass platform. Big pharmacies like Walmart and CVS are already making them available, as are hundreds of health systems across the country. So the good news is, by our estimate, by the end of September, about 150 million Americans should be able to get access to their vaccination records using the smart health card digital format.
Right. So you're working with tech companies, healthcare providers, Walgreens, CVS. Talk to us about what sort of progress you expect to make and how important you think this will be.
Well, I think it's really important because, as we're seeing, venues, but also countries and others are requiring proof of vaccination. And so I don't think it'll happen everywhere, but we're seeing schools, we're seeing employers, we're seeing bars in San Francisco and New York requiring proof of vaccination. And this becomes a scalable and secure way of demonstrating your vaccination status. In terms of progress, this is real. California in June made this technology available to all Californians who have been vaccinated in the state. So you can download a digital copy of your vaccination record with a QR code, which you can then scan or upload. And again, New York is done the same. So this is it's real, and it's many more states are following suit.
You recently announced a partnership with Samsung to help users securely store their proof of vaccination. Is Apple next?
Well, Apple in June announced their support for smart health cards standard with the release of iOS 15 coming in September. So in a couple of weeks, Apple will provide support. Google already has provided support through Google Pay. And today we're delighted to announce our partnership with Samsung so that if you have a Samsung Galaxy phone, you can store this smart health card vaccination record in Samsung Pay. You can also use Common Health, our electronic health record platform, to be able to access those smart health cards and save them to your Samsung Pay wallet.
All right. Well, certainly an important initiative. We'll be watching how it rolls out. Paul Meyer, CEO of Commons Project, thank you so much. Coming up, the engineer, best known as the inventor of Ethereum, Vitalik Buterin, joins us next. Will Ethereum eclipse Bitcoin and perhaps even Facebook and Twitter? We're going to hear from him next. Meantime, Disney has unveiled a new ride reservation system at its U.S. theme parks that lets guests willing to pay extra enjoy shorter lines. The Genie Plus service will add an extra $15 or $20 to your admission ticket, depending on the park. Some of the attractions included in the service are the Haunted Mansion and Big Thunder Mountain Railroad. Two favorites. This is Bloomberg. He's the engineer widely recognized as the inventor of Ethereum. Vitalik Buterin is also my guest on the latest edition of Bloomberg Studio 1.0. We spoke about the future of decentralized finance, the threat to legacy companies like Facebook and Twitter, and could we soon see the end of Ethereum mining? Take a listen as I ask for his thoughts on well-known crypto skeptics like Jamie Dimon and Warren Buffett and more.
A lot of them have definitely been just wrong already, right? They expected even back in 2013 to 15, at least some of them, to see blockchains and cryptocurrency fail and go down to zero in price and just not get any more interest completely. And even today, they've already been far more successful than any of them expected. So I can see how people in traditional finance, or at least some of them, can be inclined to kind of not see the value of blockchain-based finance immediately. There's a lot of people, even in traditional banks, that see the value that blockchains provide and have been trying to come up with things and work with them.
One of them is Jack Dorsey. Jack Dorsey recently announced Square is creating a new business focused on decentralized financial services based on Bitcoin, using Bitcoin. What have you learned about Jack Dorsey's plans? Does it seem like he's building something that sounds a lot like Ethereum?
I'm skeptical about these decentralized finance on top of Bitcoin type of projects. Basically because, like, the difference between Bitcoin and Ethereum, right? This is that on Ethereum, there's like native functionality that allows you to essentially directly put either ETH or Ethereum-based assets into these smart contracts, into these lockboxes, where there's then like arbitrary conditions of any kind that can then govern how those assets get released. Bitcoin does not have that functionality to the same extent. Like, Jack is basically going to have to essentially create his own system that enforces those rules, and then on the Bitcoin layer, the Bitcoins will just have to be owned by probably a multi-sig wallet controlled by like either Jack or the participants in the system. It looks similar, but it'll end up being something with a much weaker trust model. Right, like I really think that like this is the whole reason why Ethereum started as an independent system in the first place, right? Like there's technical limits to your ability to kind of graft new functionality onto a system that's not powerful enough to support that new functionality.
Facebook's Mark Zuckerberg is also making some big moves behind the metaverse, and what do you make of them wading into this decentralized world? Could they replicate some of the same problems that we see in Facebook and Twitter today?
I think Mark is clearly trying to figure out what the next stage after the internet is and like actually get into it and create it. But before the rest of the world goes in some different direction, and Facebook is sort of left in the dust and becomes one of these kind of previous generation old world companies. So we've seen Facebook try to get into the crypto space with Libra, though. I mean, I think in the end, like Libra did end up being possibly the wrong approach, because like the problem that someone like Facebook has, right, is that a lot of people mistrust them, and so building their own platform, like I know they tried really hard to create something that's a consortium with all these different industry participants, but at the same, like even that was not enough, right? And there's just a huge amount of mistrust of them. But with the metaverse, I guess the thing that happened during the pandemic is that we've basically very quickly switched from a world where the physical world was people's kind of primary center of experience, and the internet was this new add-on, to a world where the internet really is the center of people's experiences. And so we basically are spending most of our time in a virtual world, and the question is just like, what level of quality does that virtual world have?
So Ethereum in 5 years and 10 years, where is it?
I mean, hopefully running the metaverse, but I guess we'll see how it goes.
You've got a lot of people out there, a lot of people who are trying to understand cryptocurrency, who are placing their bets. What's your prediction for Bitcoin? Does it replace the dollar? Does it exist in 50 years, or is it something else? And then similarly, what's your prediction for Ethereum? Because a lot of investors are choosing to hold both or one or the other.
Yeah, I think replacing the dollar completely is unlikely, just because like there's things that the dollar provides, like price stability, for example, that Bitcoin is not going to provide. Like I think even in a theoretical world where the US dollar collapses, like even then, I think Bitcoin is not going to be able to provide the level of stability that users and businesses expect to be able to set prices in. And in that kind of world, look, we would need something else. Like it could be decentralized stable coins, it could be something else, but we'll see. But at the same time, I think cryptocurrency can still have a very powerful and important role alongside existing currencies.
You can catch much more of my fascinating conversation with Ethereum creator Vitalik Buterin on Bloomberg Studio 1.0 tonight, 9:30 p.m. Wall Street time, 6:30 p.m. on the West Coast, and at those times listed there in other regions. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Gary Tan of Initialized Capital. We'll ask him what he thinks of Vitalik's comments, along with Lightspeed Venture Partners and Microsoft Chair John Thompson. I'm Emily Chang. This is Bloomberg.